Is Bitcoin about to top? Are we close to a cycle top? Well, all the indicators say no. What do I mean by this? I mean that all of the indicators that we follow that historically predicted cycle tops are saying it's still time to hodl and not sell. Let me get into this. Welcome to Bitcoin Season 2 Breakdown, where I break down topics every week in Bitcoin Season 2 and Bitcoin news. So, Bitcoin just hit an all-time high again. We crossed over 123,000. Are we near a top? Well, of the 30 Bitcoin metrics that I'm going to show you today, 0 of them say sell. Now, there's a lot of indicators that have worked in the past, and caveat, past indicators does not indicate the future, but these metrics have historically, especially when we look backwards, they've historically predicted the top. Now, one indicator may not be the single point of truth, but when we can aggregate many of these, and many of them indicate that we're nearing a top, then maybe you consider that that could be the top of this cycle if you do ascribe to kind of a cyclical behavior of Bitcoin. So I wrote about this in the most recent Blockspace newsletter. If you want to read the full article, I'm going to break it down here for the breakdown. So let's go to this site which aggregates these CoinGlass. This is the CoinGlass site. It's really handy. It just kind of aggregates 30, quote, bull market peak indicators. And it has these here. There's 1, 2, 3, 4, 5, 6, 7, down to 30. And each of these indicators are like things that have emerged over the past 15, 16 years as analytics people, researchers try to develop like methods for detecting when Bitcoin's overheated. And the site also has here this column, hit or not. And you can see, each of these metrics has its own kind of rule set for whenever it's getting close to the top. And this site will change this X to a check mark whenever one of these looks like it's getting to the top. And it also has a progress bar here for each one to say like how far along is each metric, close to its cycle peak indicator. So this suggests we have much higher to go. I'm going to dive into just a few of these to explain what they are, and you can perhaps go deeper if you want to do some more research. So the first one of these indicators is the pi cycle top. It's currently measuring at 63% to the historical top level. And this metric has nailed the last 3 Bitcoin cycles. We can see here, it's the second one on the CoinGlass bull market peak indicators top. And it's not hit, and it's at 67%. Well, what is the pi cycle top indicator? Well, here's a chart, and you can see there's a red and a green line that follow Bitcoin's price as we look at it in a logarithmic form. Well, the pi cycle top indicator was created by Philip Swift. It has a bit of a cult following in Bitcoin circles because of how cleanly it is called the previous bull market peaks. Those two lines, red and green, are the 111-day moving average and double the 350 moving day average. 350-day moving average. When the shorter term average, the 111-day moving average, crosses above the long-term moving average, it has coincided with major cycle tops. Note, 350 divided by 111 is 3.153, which is very close to pi, which is where this indicator gets its name. So let's take a look at it. Let's look back. This is 2010. We see here red and green, and we see them cross near the peak before and after. And then we go to 2013, we can see a similar behavior here. And then we can go to 2017, same thing. If you remember the bull run in 2017, and in 2021, And here we are today where the two lines are not really that close to crossing. So this indicator would flash cycle top when the red line crosses over the green as described in the description. So we're halfway over, halfway there, but there's still a considerable distance for us to go. So the next one is the Puell multiplier, and it is a miner that watches. It's a multiplier that watches Bitcoin miners. So what are the Bitcoin miners doing? Are they buying? Are they selling? What's happening to them? Because they're a major component of the Bitcoin ecosystem and the production of Bitcoin. So the Puell multiplier thinks of Bitcoin kind of from a supply side perspective, where if mining economics are bad, miners often become forced sellers of Bitcoin. Now, there's a whole debate on whether this actually drives the price or not. But regardless, we can pull out a metric from it, and this metric basically looks at the daily miner revenue divided by the 365-day moving average of miner revenue. And this metric is at 1.23, and a 4 would signal that we are close to the top. So this multiplier at 1.23 is telling us miners are not even close to their peak revenue territory. So here's how it works. When miners start making at least 4 times their yearly average, this usually indicates unsustainable euphoria, because people start pouring a lot more money into mining, things get overheated, mania happens. This indicator also has an interesting signal to the bottom side, where it actually tells you, it often tells you cycle bottoms, because miners become compulsory sellers whenever unit economics are really, really bad. So they have to sell all of their Bitcoin in order to cover expenses. So if we look at this chart, this red band up here starts at 4, around 4, and whenever this this red line here, which is that Puell multiplier, whenever that climbs up to this multiplier of 4, then we can expect, at least historically, that's when a cycle top has occurred. We see this again happen in 2018, 2017. We see this happen in 2013, and also in 2011 and 12. So this has been a reliable indicator historically. My personal opinion is that this is less useful, as if you look at our other contents, particularly the mining pod, you'll see that mining economics have kind of evolved as of late, but this is a popular one to reference, and so I'm kind of putting it on here. So there's many, many more indicators on this site, but I will skip a few and go to kind of the next pillar, which is the reserve risk, which kind of is an indicator which tracks long-term Bitcoin holder confidence. And we are about 52% along this indicator. And if we see here number 16, now we're actually at 54% on this indicator. So we're only about halfway there, saying that long-term holders may be selling. So let's explain this indicator. The reserve risk indicator looks at the ratio between the current price and the long-term holder conviction as measured by what it calls the HODL bank, which is a cumulative metric of how long coins have been held without moving. Lower risk means holders have strong conviction relative to the price, and higher risk means conviction is low compared to the market value. Basically, are long-term holders holding or selling? Currently, holders have substantial conviction. Near the top of the cycle, we would expect the reserve risk to spike as long-term holders sell into strength. Let's take a look at this. So we have this Bitcoin reserve risk. which we can look and see. Let's just take a look at the 2017 run. We can see that the Bitcoin reserve risk here, this like teal line, gets kind of peaks right around December 2017, which was actually very precisely near the top of that cycle. I believe it was the 17th or 19th of December. We can look at that and we can see that we're not seeing the same kind of behavior today in 2025 with the reserve risk. Basically, like, we're not seeing a strong indicator that long-term holders are selling. I want to give a reality check here. So, like, it's tempting to look at these readings, of which there are 30, and conclude that the bull run has a long way to go. Well, that is kind of my personal gut feeling. Every cycle rhymes, but it does not repeat. Yes, major tops experience a convergence of many signals historically, and we're nowhere near that point today. But it's also worth noting that some things, are different. As first of all, these indicators are backwards looking. They're based on conditions that exist in past cycles. We have some new things at play right now. The presence of U.S. listed spot ETFs. Miners are kind of changing their behavior, and demand for these type of assets, particularly Bitcoin, is changing. And then I'll point out that a lot of these indicators look at on-chain behavior. So, like, they look at what's happening on-chain. As investors are moving to particularly ETFs and even treasury companies, on-chain metrics become less useful because the actual data of what people are doing with their Bitcoin is not as revealed on-chain. It's more described in, say, 10Qs or public mining equities, stuff like that. So as investors increasingly adopt Bitcoin through ETFs and treasury companies, the on-chain activity becomes less useful. There's another thing, which is exogenous events, so things which happen outside Bitcoin. Like we've had, if you look and you zoom really far out, the past 16 years of Bitcoin prior to COVID kind of existed in one particular market regime. The era of quantitative easing and easy money and really in booming tech stocks for the US particularly. That's not really been the case since COVID. Things have changed. Market structure has evolved. And so as we see a geopolitical crisis or regulatory crackdown, things can change. But then also we may be kind of in a new era. You may have heard that term before. And then the last one is there's a difference between a secular Bitcoin cycle of say 4 years and a mid-cycle correction. So historically, we have seen multiple 30, sometimes 40% pullbacks in a cycle. And in that period, and when those happen, you would actually see some of these indicators start to flash red, but you wouldn't see all of them flash red. So we can, we've historically expected multiple pullbacks during these cycles. If you wanted something useful, it's maybe when over half of these indicators are signaling top, that would be a time to consider that this may be, we may be near a cycle top. But then again, the big caveat is if we knew the exact playbook, we'd all be retired on an island somewhere. We can apply, it's useful to apply historical heuristics to the current cycle. And by my estimation, looks like we're going higher from here, but do your own research. Don't just listen to me. Listen to other real analysts, and I will occasionally update you with what this chart is saying. So thank you so much for listening to the Bitcoin Season 2 breakdown. I'll see you all next week.